Imagine two people walk into the same bank. One has $500, the other has $500,000. They ask the same question, "Can you help me?" But they may get two very different experiences. And the strange part is this: the person who needs cheaper money the most can sometimes end up paying more for it. Why? Because banks aren't only looking at how much money you have today, they're looking at how valuable your entire financial relationship could become. Script. Hash. 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 The customer nobody notices. Meet Jake. Every 2 weeks his paycheck arrives. Then rent takes a huge chunk, groceries take another, bills take another. By the end of the month, Jake might have $40 left. One day, an automatic payment hits at the wrong time. His account is too low. Now Jake has a problem. He calls the bank, waits on hold, explains the situation, and hopes a fee can be reversed. For Jake, $30 can matter a lot. Now change one thing. Jake has $500,000 in assets. Same person, same bank, same problem. But now the bank sees something different. Not just a checking account. It sees investments, deposits, loans, potential future business, potential mortgage, potential wealth management services. Jake isn't just a customer. He's a valuable long-term relationship, and that changes the economics. Banks don't just see your balance. Most people think banks ask one question: how much money does this person have? But they can consider much more. How stable is the income? How much money stays with the bank? Does the customer borrow, invest, use other financial products? The goal is simple. Asterisk. Asterisk, how valuable is this relationship over time? That's why banks create different levels of service. At the basic level, you're usually dealing with an app, a call center, or a general branch employee. As the relationship becomes more valuable, banks can offer more specialized service, dedicated bankers, and wealth management support. Major institutions openly market these kinds of services to higher value customers, and that creates a weird financial reality. The more valuable you become to the system, the more attention the system can afford to give you. Hash hash. Hash money can become cheaper. Now imagine Jake wants to borrow $20,000. If the bank sees limited assets and higher uncertainty, the loan may be harder to get or more expensive. But someone with strong credit, substantial assets, and multiple financial relationships may have more options. And options matter, because you don't have to accept the first offer. You can compare, negotiate, wait, use another source of credit. That's one of the hidden advantages of wealth. Wealth creates leverage. Asterisk. Asterisk. And leverage can make money cheaper. The real advantage of wealth. This is where people often misunderstand wealth. They imagine it as a giant pile of cash. But wealth is also a giant pile of asterisk. Asterisk options. Asterisk. Asterisk. Your car breaks. You have options. You lose your job. You have options. A business opportunity appears. You can decide instead of panic. That's incredibly important, because when you're financially fragile, every problem becomes urgent. A $1,000 emergency can force you into expensive debt, but with a large enough cushion, you can handle the same emergency without changing your entire life. That means wealth doesn't just change what you can buy, it can change how you behave. You think further ahead, you can wait longer, you can say no, and being able to say no is financial power. But there's a catch. Don't make the mistake of thinking wealthy customers automatically make perfect decisions. They don't. A private banker can give you more attention. That doesn't mean every product they recommend is right for you. A premium service can feel impressive. That doesn't mean it's worth the cost. And a bigger bank account doesn't make someone immune to bad decisions. So the real lesson isn't become rich so the bank treats you better. It's this. Understand the incentives. Understand why the bank wants your business. Understand what you're paying. Understand what you're getting. And most importantly, build enough financial breathing room that you don't have to accept the first option you're given.